Hey everybody, welcome back. I'm going to do a video right now. Let me just make sure that the the microphone is working. Get that right. Yesterday I did a video and made the whole video and the microphone wasn't working. So here we go. Okay, so first thing, I'm going to get to some trades and we're going to get to the exciting part, but stand by because I want to kind of set this up a little bit first. First of all, I want to just point out a little thing here. I got a nice thank you letter from a young man by the name of Colin. Basically, he was saying that someone of your caliber would take the time to talk to an inspiring trader like me. That short call was a huge confidence boost and another major step in my trading career. Well, first of all, I let me first say that I didn't get here on my own. No man is an island. I am a little bit of a recluse and somewhat of an introvert, and I don't like people very much. But but that's just me. But I still had a lot of people help me get to where I am, and I think that's really important for many traders to really keep that in mind. That you can't become a professional trader on your own. It's impossible. Okay. The entire financial community, especially the trading community, is based around mentorship and what do they call that? Where you go and work on an apprenticeship everywhere. Like you could be the smartest person in the world, go get a job at Goldman Sachs, and they'd still say to you, go sit down beside this guy, watch what he does. And you'd have to do that. The entire industry is based upon apprenticeship. So if you think you're going to make it on your own as a trader, good luck. You need somebody like me to help you. So quickly, I just don't want to dwell on this. Anybody can add me on Skype, okay? Anybody can add me on Skype, SSP Trader. Just go to Skype. You can add me, and I will talk to you, okay? I'm right here. Drop in, say hello, and I'll talk to you. I offer a free 20-minute consultation. I have like over 3,000 people in my room right now, and like 3 people have actually reached out to me for a free consultation. Okay, so let's get to the trades. Enough of that. So that being said, I shared that with you not to brag. I shared that with you because it's the reason why I coach, guys. The whole reason why I run this room is because I truly, truly, truly enjoy helping people. I probably should have been a teacher in my last life. I probably would have been a much better teacher than I was a trader. But, here I am. And so this is kind of my little way of doing that. Okay, so I want to go to today and start to talk about the 2 trades that we took in the room today. This is where we get to the fun, exciting part. So I'm glad you bared with me on that. So if you can, as you can see, if I get there finally, I started off today. What the heck are? Oh, those are my mentions. Forgive me. I started off today talking about a few trades, and right off the bat, I started posting some trades. So the first trade that we're going to talk about is the pairs trade I did on PayPal and Square. So I posted this in the room this morning, right, that I am looking to buy PayPal and Square. So what you're looking at here is a chart. Now on this particular chart I happen to remove the wicks because I find the wicks when you're looking at pairs to be very they're distracting. So I posted that in the room this morning. I said we're long, and I got long off of this level here. Now, what you're looking at here, if you don't know what this is the difference between PayPal and Square. So at the time I took the trade, the difference between PayPal and Square was $38.51. But this is an asset in itself, and it's important that you look at it like an asset in itself. So why did I take this trade? Well, because see this little indicator that I have here, which I tell people to buy, but nobody seems to want to buy it. It's the most powerful indicator in the world that I use because it tells me overvalued and undervalued situations. And I took the trade here because we were at 2 standard deviations of the VWAP, and I could tell that this was a very good trade by the order flow of the underlying. So if we go over to these charts over here, just follow with me here. PayPal had a big gap down, and you'll see that this also went into an overvalued situation. So an overvalued situation. So I wanted to get long PayPal, but you can see that Square was performing better than PayPal. So I know that these two are correlated enough. Okay, now some of you who are going to be pure correlation addicts are going to say, Steve, PayPal and Square are not correlated. Well, they don't have to be exactly correlated, okay? The market, a rising boat is going to raise all ships, and a lowering tide is going to lower all ships. So the fact that they're relatively in the same industries is close enough for me. All right, now I'm not going to get into a big argument on that about, you know, what exactly is a pure correlation and what's not a pure correlation. Forget about that. That's not what matters, okay? So basically what I did was I decided to get long PayPal and short Square. Now you can see the time that I did that. Notice my cursor is going to go over those two things. Notice my cursor on the right. So PayPal looked like it was bottoming to me. And as you can see over here, it did bottom. And Square looked like it was going to continue to sell off. And as you can see, PayPal did rally off of that level. Square rallied with it, okay, but the accompanying rally was not as big, right? So what happened was I got in here, and as the market moved higher, it actually spiked up to this level right here, 39.11. I took the wick off so you won't see it, but that is where I got out of the trade. Okay, and that was a beautiful trade. So remember, I'm getting long here on PayPal. Think of it like that. And I'm getting out of PayPal right at that peak right there. That's where I got out of my trade. So I made this profit here on PayPal. At the same time, I'm getting short this market here, and I'm getting short here, and I'm getting out right here. This is where I got out. Okay, so you can see there's a difference, isn't there? Now also, I'm buying the relative amounts of each of these things. You want it to be equally weighted in dollar values. So even though the price moves are different, the equal weighting in the dollar amount is what takes profit. So I captured this as a gain, and I took a loss here. Okay, so that was the first trade. Now the next trade gets really interesting, and we'll talk about that right now. Let me just get rid of this stuff here. Clear drawing set. Let's get this stuff off. If I don't clear it as I move along, it gets really kind of funky. So as the day moved along, I really liked this Apple trade here. So let's look at these two pairs individually, and Microsoft. Now, Microsoft, to me, there was an upgrade on Microsoft by Jefferies, okay? And I knew that it was going to probably be catching bids all day long, and it was going to be spiky, and that was the trade. So I knew, I thought Microsoft was going to be stronger than Apple for most of the day. And here's the correlation as we see the correlation. Now what had happened is, again, you see this little spike right here, okay, telling me that Microsoft had gotten into, the Apple Microsoft had gotten into a over bought condition on that little spike, Okay, so what happened was, you can't see it right now, but it spiked up here. I took the wicks off because I'm just cleaning it up right now. If I show you with the wicks, it's harder to show. Okay, we spiked into 2 standard deviations, plus we got also this all important overbought situation. So what I wanted to do is get short Apple and buy Microsoft. So that's exactly what I did right there. Okay, I got short Apple and bought Microsoft. So again, I'm short Apple right here. Notice over on this Apple 1 minute chart. And I'm buying Microsoft right here. Okay, right around the same time. Now this trade was dog shit. It worked. It was terrible. It did not work out as nearly as good as I would have liked it to, and that's why I've taken these wicks off. Because I used to do these trades. By the way, guys, I used to make a fortune with these trades. I mean, when I was day trading at prop firms, this was my bread and butter. Okay, because it's extremely risk-free. You don't have to get the market direction right at all. You know, you can just trade this as a directionalist trade against the overall market. As long as one does one thing and the other one does another thing, it's absolutely brilliant. So this trade went for shit and went against me, and I just stuck with it. Now, what I should have done is I probably should have taken it up here, which would have been a lot less stress-free, but those wicks really kind of freaked me out a little bit, and I chased that trade a little bit. It was a mistake. So it was hard to manage this trade, but I want to show you, because I had the pair open, I didn't have to take a loss on this trade because I was hedged. And that is the beauty of what doing correlation or pairs trades or hedge trades allows you to do, is it allows you to sit through tough times rather than getting stopped out. So what I said was, my stop was up here, my target was down here. So the trade went against me, painful, 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 but I was still saying in the room, and I want you to go and check this in the room, it's all here for yourself. I walked this trade through every single step of the way, telling you what I was doing and how I was doing it. And there's the April pair trade. And as you can see here, as the trade went against me, I said, well, this trade surprisingly is not working, but it's still contained, so I'm not going to close it just yet. The market is completely random today, and anything can happen. And you can see here, trade is still underwater, but is looking better now. So we started getting close to my target. Then what happened was the trade actually got back to break even. And I didn't close it. I said, you know, I'm hedged here. Why do I need to freak out? Why do I need to stress? I got a nice hedge on. I have nothing really to worry about here. And we're containing the market. And then all hell broke loose. Okay? All hell broke loose. And the market, as you can see, if we look at the actual stocks, the market spiked up like crazy, then spiked up again, and I just sat through that. Now, what actually happened was, in this particular situation, when we picked up this little bit of liquidity right here, and my students will understand that, my students that follow me, that have taken my full course, okay, when we picked up this little bit of liquidity at this level right here, which is an important level, what I decided to do was say, screw this, I'm going to close the long side of the trade. So remember, again, let's look at what I did here, okay, guys? Remember, I am short Microsoft here at that level, and at the same time, I am long. I'm short Apple here, I'm long Microsoft at that level. So what happened when we spiked up to that level? Well, what happened? The Microsoft trade, which was underwater, right, for most of the time, I was actually able to get out of that trade with a small profit right there. And if you go and check the timestamp, what I actually did was I said, and you'll see it's all time-stamped here, guys, okay? This isn't me telling you about trades after the fact. This is me showing to you what I actually did in my room. Okay. Num num num. So what I did was I said, You'll see it here. There we go. Okay, so I said it 3 times. Okay. I'm going to exit Microsoft longs here with profits and hold the Apple shorts. Stop on the naked Apple short is the high of the day, which at that time was about here. Okay? So that happened right there. Okay? So I repeated it. We are only holding Apple shorts now. We had taken off the profit that we made on the Microsoft, and we were naked on the Apple shorts. And then boom! Kabunga! I closed the Apple short down here for a huge profit. So remember, I made money on the long here on Microsoft, and then I made money on the short here on Apple. Now all I had to do to get back to break even was to get back to 126.99, but I got this beautiful gift and I was able to crush it right near the lows and ended up being a huge day. Okay, but there's the correlation. Even if you didn't take off the correlation, you could see the correlation came back and you would have made net profit on that by the end of the day. Okay, so beautiful trading today, very complex day. It was not easy making those decisions, especially staying in this naked position in Apple. But by understanding order flow, by understanding all the things that I teach in my one-on-one mentorship program, you can get into trades that can buy you more time. I mean, yes, you can just trade correlations if you like, and they're pretty simple to trade. I mean, it can give you I can teach you a strategy on how to just trade correlations. But when you can trade correlations and understanding the order flow, understanding what did I do as a floor trader for all those years, it made me tons and tons and tons of money. By understanding liquidity pools, by understanding how things move, the way they work, you can fine-tune this to be a masterful trader and, hopefully have a 40-year career like I have had. Okay, so those are the trade reviews on the correlations that we took as day trades today. I probably will be doing more of those, especially as we go into this Trump trade deal announcement. Otherwise, we have a couple of other trades that are working on some higher time frames. I have some other trades here that are working. They're all posted in the room. We got a swing trade working on J&J right here. Okay, I got short J&J off of this level right here. I believe it was. That was the level, so that's working quite nicely. We are short Microsoft as well too. I don't remember exactly, guys. Just if I'm saying this wrong, the guys in the room will know. But I think we got short Microsoft off of this level right here. So that's working nicely. Nike, I got short Nike off of this level right here as well too. So all of those trades are now in profit, and we are exposed 5% on those as swing trades. Okay, so that's a recap of everything that happened live, time-stamped in my room. I am not one of these guys out there that is an after-hours trader and goes and tells you what they're doing after hours. That's not me, guys. I call those guys hindsight gurus. All right, if you really want to see a trader in real time, it's all here in my room, and it's all free. And as you can see, many of my people that are in here are making good money. Look at this guy, the Doc. I love this guy. He's been with me for a while now. 4% total gain. You should really start charging for this gold. And yeah, there you have it, guys. Hope you guys enjoyed that trade review. Thank you. Tell everybody about this room. It's not going to be free forever, right? It's going to be free for a while. But I'm one of those people that you should put your money where your damn mouth is, okay? I'm sick and tired of all those people on the internet. They're telling you things without proving it first, okay? I'm proving it. It's all time stamped here. You can go back for 8 months now. See every trade that I took. I am up over 95% on the year. Now you might say, big deal. Yeah, that's a huge deal. You know why it's a huge deal? Because I did it with 1.5, maybe 2% risk on every trade. That's massive, okay? That's legendary. It's all time stamped here. Thank you guys. Bye for now.